Top three things in my notebook this morning. Number one, Europe. Number two, the Russell 2000 Growth Index. And number three, the 10-year bond yield again. So Europe, first of all, you got to look at it for what it is. All of a sudden, it's starting to make lower highs, with the exception of the DAX. The DAX actually making higher highs. But what I'm looking at here in Europe is in the face of what's been very good economic data, certainly on a relative basis to itself. So again, thinking about the slope of the line, European GDP growth going from -1% to +1% and change, or German growth going from 1 to 2.5. The point is that the slope of the line is going up in Europe, and has been, for the last 6 months, whereas the U.S. is not. So that's the other point. On a relative basis, European growth in terms of rate of change has obviously been better than the U.S., and I think that explains a lot of the performance divergences in European equities, specifically versus U.S. growth equities. Now, leaders lagged this morning, though, in Europe, so again, maybe this is all baked into the cake. Greece down 2%, Italy down 1%, and Ireland down almost a full percent. These markets have been very good year to date, but again, they run into this thing called sell in May. Russell 2000, number two. If you're long that, you're going to bang your head against the wall this morning, or maybe throw the phone at me. But the point is that the Russell 2000 looks just like bond yields, which I'll get to in a second, which are pointing downward. Downward dog for the Russell 2000. That would be the new formation for all you technicians out there. Russell 2000 down 8.7%. Now since March, down 1.6% yesterday, down 1% the day before that. But we're at the all-time highs. 10-year bond yield at the same time, look at that. Downward dog. Down. Get down. This is what it is. I think I'm in a hotel room, by the way. People might tell me that I'm disrupting their Keynesian behavior. But the reality is that the 10-year bond yield is making new lows. When the 10-year bond yield makes new lows, you either say that is what it is, or you say it's different this time. It's not different this time. 10-year bond yield and growth stocks going down at the same time happens when growth expectations are falling at an accelerating rate. But you already know that. So those are the top three things.